So with the spring market approaching, it's important to understand that when you turn on the news and you see that rates have ticked in one direction or another, it doesn't necessarily mean what you think it does, right? So interest rates are determined in eighths, 5 1/8, 5 1/4, 5 3/8, and so on. And when rates tick up or down in one direction or another, it doesn't even necessarily mean that that rate has moved from one to another, right? So for instance, it might cost $1,000 for a 5% rate, and tomorrow it might cost $500, or it might cost $1,500. What this really means in layman terms is that very rarely do you qualify for a home one day that you don't qualify for the next day, and vice versa. So when people stop shopping or start shopping based on rates ticking up or ticking down, it's usually not a clear indicator that they're being explained what they need to have explained to them to understand the situation. When you reach out and you get pre-approved, we go over payments and we determine how much you can afford to spend. And oftentimes taxes and insurance play a bigger part in your mortgage payment than the actual interest rate. So that doesn't mean it's not necessarily a good time or it is a good time to buy. It just means that if it was a good time to buy yesterday, it's probably still a good time to buy today.